Hi, we're here today with John Carr from New Century Resources, NCZ, listed in Australia, approximately 500 million Australian market cap. John, how's it going?
Very good. Thanks for having me.
Could you tell us a sort of broad overview of what New Century Resources does?
Yes, so New Century Resources owns the Century Zinc Mine in Australia. We started operations about 5 months ago, and we're looking to be a top 10 zinc producer in the world. And we're doing that through the reprocessing of tailings from the Century Zinc Mine.
Excellent. Approximately how much are you processing right now?
So the tailings resource is about 77 million tonnes. Right now we're getting to initial capacity of 8 million tonnes per annum, and we'll look to increase that to about 15 million tonnes by the end of this year, calendar year.
Okay. What kind of investment do you need in CapEx to get to that stage?
So to date we've raised about 95 million Australian dollars, and we have a $40 million debt facility. And that is pretty much what we will need to get the operations up and running, which we've already done, and to get us to our nameplate of 15 million tonnes per annum to date. So the aim is to pay for that out of cash flow from the operations.
Excellent. When do you think you'll be up to the 15 million tonne capacity?
But by the end of 2019.
Okay. And is there plans to go further than that in the coming years, or
not really? 15 million tonnes per annum is quite a big operation. We're constrained by the size of the plant that's there, because we're taking the existing tailings and we're processing it through the existing processing plant. So the aim there is to utilize that full infrastructure without having to add a lot more capital, because that keeps our cost base very low. So we're constrained by about 15 million tonnes per annum of tailings, and that produces about 500,000 tonnes of zinc concentrate. So the aim there is probably to look to get it up to 500,000 tonnes per annum of zinc concentrate, and look at how we can supplement tailings through the existing in situ resources and or other identified resources on the deposit, which we are looking at.
Excellent. You will be financing all of that expansion through cash flow, which is excellent. The market always likes to hear they don't have to give you more money.
Exactly. Yes.
In your own words, what would the key value propositions, like what would be the good reasons for investors to invest in you now?
Sure. So I guess the single key biggest aspect of the project is the low operating cost. Because when we acquired the mine, all the infrastructure was there. You're looking at a tailings resource. From a geological point of view, it's practically de-risked. There's no geological risk. You know exactly what's there. So we have a very, very low mining cost, very low processing cost, and overall we're in the bottom quartile of the zinc cost curve. So that means you always want to be the last one to turn your lights off when the zinc price fluctuates. So that puts us in a very competitive position in the global zinc market. The second point is that, as I said, all the infrastructure was in place. So apart from the investment for getting the operations back up and running, and some capital for the hydraulic mining, which is greenfields, we have very low capital requirements. So we have very low debt. So from an investor point of view, you're looking at a company which will be very strong in the peak and the trough of the zinc market, and in a very good position from a debt point of view.
One of the things you've mentioned is that you own all of the infrastructure and the slurry pipeline and the port and all of those facilities. How specifically does that help the company? What advantages does that give you?
Yes, so we have the full underground slurry pipeline, which takes all of our concentrate from the mine site to the port, fully mechanized port facility, and the transshipper, which takes the concentrate from the stockpile at the port onto the ships. So we own the full logistics supply chain, and that's pretty key, because that means we have very, very low cost for production and transport of our final product. So we own the full logistics supply chain. No one else in that region has anything like that, and for us to be able to have that from day one means that we have a very, very low cost of production, everything downstream from actually producing the product.
Does that have a resale value, or do you think you could utilize it for other projects?
Absolutely. I suppose that infrastructure gives us quite an interesting sphere of influence, as we call it, within the region, because if you look at the different projects that are in that region, there are a number of different base metal projects and zinc projects specifically. So that does give us the opportunity to look at sharing and giving access to the pipeline, to the ports longer term. I mean, certainly our focus is on how do we maximize the utilization of those assets in the short term. But longer term, yes, that gives us a number of different commercial outcomes that we can look at to continue to monetize the value, the sunk capital that's been put into that.
Excellent. Do you want to talk a little bit about the zinc market and why, despite the fact that you're de-risked for any sort of falls in the zinc price, why you think zinc may or may not do well in the coming years?
Sure. So the zinc market in, I suppose, the past 18 months has went through, it's been a bit of a roller coaster ride. Mm-hmm. A lot of that was driven by the environmental regulations within China. A lot of zinc mines in China shut down. So that limited the amount of concentrate that was available in the market, and that caused a bit of a spike in the zinc price. That's subsequently come back down now, but we're seeing the problem shift down the market now, where the smelters in China are now shutting down. So there's a limit in zinc metal. That will mean that there is more concentrate available, but that will also keep the zinc market quite high. So the fundamentals of zinc are quite good. They're growing at about 2 to 3% per annum, generally on average, which doesn't sound great, but when you put that in the context of the whole zinc market, you need about 250, 300,000 tons of zinc metal additional every year to meet that. So that's a new century every year in order to achieve that. So we see that the demand for zinc is quite good. And from a supply point of view, we're fairly well positioned, because when you look at the other projects coming on, there's not that many new centuries or other large-scale projects that are coming on to fill that gap. So we see the fundamentals are quite good, and the zinc price should be quite good long term.
Why is it you think your team is well placed to deliver the growth that you're looking for?
Yeah, so I think that one of the key aspects that was important for us to be successful was to come at this with a very focused view. We formed a lean, mean, junior style mining company rather than a large scale company, which means that we have very low corporate overheads, and we've got a very site-focused team. So that means that everyone has their eye on the prize. We've got one project right now, so that is everyone's focus. And we also have, I guess, a group of diverse individuals that are in our board and senior management, which come from a range of different operations across Australia and across Africa, which bring different experiences to help guide us and help us avoid the normal pitfalls when you start up a mining operation, all the way from exploration to actual operations. So we feel like we've got a very diverse set of skills that we can tap into in order to really do what we say we're going to do.
Okay. So if we can dive in a little deeper, can you tell us a little bit about your board and your management team and why their backgrounds and experience sort of makes them good at what they're doing and how it helps the company move forward? Sure.
So Evan Cranston is our chairman. Evan's got a long history in mine development, particularly in Australia and Africa. He partnered with Patrick Walter, who's our managing director, with a very similar background. So they bring a very strong experience based in project development and funding. That is complemented by Tolga Kamova, who is our corporate director. Tolga is quite famous, particularly in the Australian context, for raising quite a large amount of money for some key projects in Australia and Africa, particularly the Sierra graphite mine in Mozambique. That's probably his claim to fame. So between the three of them, they're quite well placed for financing, for marketing the company, and for the basics of developing a mining company. That's supported by Peter Watson, who's our non-executive director. Peter Watson used to be the managing director of Sedgman. Sedgman is our engineering and operations partner on site. So Peter brings a wealth of experience of how you can look to operate mine sites, but also partner up with contractors, which is what we do. It's pretty key to our operations. Really to get the best of both worlds, to make sure that we keep a lean, mean team on site, and that's the interaction between all of our contractors is very well done. We also have Tom Eady, who is our non-executive director. He comes from Pasminco. He was actually on the original Pasminco team that developed the Century mine, so he's very familiar with the geology of Century. But again, he brings a wealth of experience in exploration and development of different mineral assets. So when we're talking about the other potential assets on Century and regionally, he's quite key in leading the geology team there. And we also have Bryn Hardcastle, a non-executive director, but also, I suppose, a bit of a in-house counsel as well. He's a lawyer by trade and runs a law firm out of Perth. So he brings a lot of the corporate governance aspects to the business. So I think we've got quite a good team built around all the different aspects that you would want in a junior mining company.
It sounds like it. Now, you've got 6 years of mine life ahead of you, and you're ramping up to full capacity. You could probably eke, I would imagine, at least 10 years out of that. But what do you think you're going to do post that? You're making reasonable profits,
yep,
considering you're in the lowest quartile of the cost curve.
Yep.
So what are you going to what are you going to do with those profits? Are you going to return them to shareholders,
yep,
or are you going to expand? And if so, how do you intend to expand?
So right now, as it sits, we've got 77 million tonnes of tailings. We've got about 9 million tonnes of in situ ore. So as you said, that'll take us for about 10 years of operations. We have an exploration program in place to look to add on resources into the back end of that. So if we can find another large Century, that would be fantastic to keep us going into the future. But ultimately, what our value proposition is that in all of our operations, what we need to be doing is rehabilitating the mine site. So shrinking the surface area of disturbance so that the environmental bond comes down, the liability comes down, so that when we do get to the end of the economic life, where every last steric of zinc has been removed, the remaining environmental liability is quite low. So during that time, of course, we will be producing profits, and because we are solely focused on Century right now, the idea is probably to look at returning that to shareholders through dividends, another thing that investors like to hear. But the other thing that we've seen is that this is a bit of a niche in the mining industry, and there are a number of opportunities that we could look at to effectively rinse and repeat this business model, to look for other mines which are either shut down, about to shut down, or have been shut down for some time, and look at I guess refocusing and re-looking at what was there to see if we can repeat the business model in other mines in Australia and abroad. Okay.
A bit of a difficult question, puts you on the spot, but why, if you do buy into the idea that zinc there's steady increasing demand and no significant increases in supply, and the price should be steady if not increasing in zinc going forward, why should we buy you versus one of your competitors?
So again, I think it comes down to being the lowest cost, and I think that's something that we're going to be very solid on. We have a very, very low mining costs. You can see some photos in our presentations where you see hydraulic mining. It's effectively high pressure hoses, and so I don't mean to understate the importance of it or the nuance of it, but our overall cost of production is quite low. So if you have a new mine coming on, a new greenfields mine coming on, A, they're going to have a lot of capital they've got to pay back. B, they're going to have quite high costs typically at the start until they get to their production. And C, well, they're in the future and we're now. So we're up and running now. We're predicting our first positive cash flow quarter, and obviously going forward upwards and onwards from here. So I think when you look at the fundamentals of New Century versus our peers, I think it would be hard pressed to find other companies that could beat us.
It's a decent point to make. So if I'm sort of summarizing what I see to be sort of things that investors can look forward to this year, ramping up on time and on budget to full capacity.
Yeah, that's right.
1.8 billion in free cash flow at a long-term zinc price over the life of mine.
Yep.
Looking for potentially new resource on your existing project or potentially new projects to bring into the company.
Yeah, that's right.
And it looks like you're also divesting opportunities for non-core assets. Do you want to talk a bit about that?
Yeah, so the history of New Century was that it had a previous life, as a lot of mining companies do, and in that previous life, it owned a coking coal asset in the United States. Very good coking coal asset, but doesn't really fit our business model, so we're looking to divest that. So we've got an active divestment process of that. That project's called the Kodiak Coal Project in Alabama. The second aspect of the company, and more to do with Century, is that we actually own a cattle station, quite a large cattle station that surrounds our mining lease, and that was for a lot of historical reasons. That the previous owners, CRA at the time, had a philosophy of buying up all the land around the mining lease, because that gives them, I suppose, control and also bargaining chips for when they're looking to put different agreements in place. And anyway, the long story short is we ended up with the Lawn Hill and Riversley pastoral stations, which currently runs about 35,000 head of cattle. Now it's a very interesting business, very high product, it's very prospective. But again, we're not in the business of selling cattle. We're in the business of digging up zinc. So we're looking at a potential divestment process for that with, I suppose, a partner that understands what we're doing in the short term, but with the aim of longer term returning all that back to the Aboriginal community who's already invested in it.
Excellent. So you're ramping up and it's fully covered costs, so there'll be no sort of increases in calling to the market. And you could have potentially a little bit of extra cash coming in from divestments. How is your program for finding new projects going? Are you looking for tailings projects or zinc projects?
Probably, I would say both. Where right now, I think that the big focus is on Century and on the expansion of Century and getting that to nameplate and seeing what other deposits are on the site. I think any new project will be it will be bespoke, and we'll evaluate it each on its own merits to see if they fit the business model. But certainly, it would be either or both of those. It could be another tailings play, it could be another zinc play, or it could be another zinc tailings play. I think we would maybe longer term look to diversify across other metals. That would be ideal for us and probably for our investors too. But certainly now, I'd say if I had to split our focus, I would say certainly 95% of our focus is on getting Century up and running, ramped up, and extending out that mine life. So any investors looking to come into the company should be looking at Century, and the blue sky is always blue sky.
Is there anything else you would want investors to know?
Look, I think the other unique proposition is that we own the full logistics supply chain. So beyond the mine, the Century mine itself, there's a 304 kilometre underground slurry pipeline. There's a fully mechanized port facility in Karumba, which is on the water, and we own the Wunma transshipper. So that was the full logistics supply chain, which took zinc from mine all the way to port and onto the ships. And when we acquired the company, we acquired all of that. So we're not beholden to anyone. We've got the full logistics supply chain, which is a bit unusual as well, and again puts us in a very strong position. And also regionally, when you look at the amount of investment that's been put in that infrastructure, and you look at the other assets in that region, that there are other opportunities for joint development or joint utilization of those assets going forward. So I think that's a pretty key advantage for us as well.
Can you tell us a little bit about what you think the catalysts are going forward for the company, and also what's going to fundamentally drive the share price beyond where it is right now?
Sure. So I think historically, New Century has always been looked at a mine development company. So when people try to derive a valuation, and then the share price is derived from that. People look at it from a discounted NPV. So I think now that we've gone into operations, and now that we're starting to produce cash, we'll go through a re-rating. That's typically what happens with mining companies when you go from a developer to an operating entity. So then it just becomes a matter of, well, what multiple then gets put on the cash that we produce. And obviously it's important for us to demonstrate that we produce the cash that we say we're going to do. So I think demonstrating that we are producing cash is going to be the first catalyst that will cause a re-rating for the company and how investors will value the business. The second is obviously the zinc price. Like any company, when the zinc price goes up, our profits go up, and then we produce more money. So we are, I guess, bullish on the zinc price. We don't think it's going to be quite as high as it was mid last year, but certainly we believe it will be higher than it is currently. So that will give us growth as well. So, and the third, I think, is continued demonstration of extension of mine life. So people don't see this to be a short-term asset of only 6 to 7 years, that when we start to really put forward the value of the in-situ resources, the potential for exploration, and people see that the mine life will extend, again, people will start to treat us a bit differently with how they rate the company.
Are there any sort of specific time periods in the future where you think some of these announcements will come out?
So we put out our quarterly cash flow on the 21st of January. In that, we said that we're predicting our first positive quarter of cash this quarter, and it's going to be onwards and upwards from there. So your guess is as good as mine as to how many quarters or how long people need to get comfortable that re-rating will happen. We're also going to be releasing our pre-feasibility study on the integration of in-situ operations into our current operations, which again will allow people to go from a 6 to 7 year mine life to a 10-year mine life. So I think in the next 3 to 6 months, that's when you'll start to see the hopefully the dial will move a bit on the business. Yeah.
You also intend to be at full capacity by year end, if that's
yes,
correct.
That's right, by the end of calendar 2019.
So that's a good solid year of milestones to try to achieve.
Yeah, that's right. But if you look at the history of the company over the last 2 years, we've been fairly aggressive, and that's been key for us, is to deliver on our promises. And we're a young, hungry team. If you look at the history of the company in the last 2 years, we've been pretty bullish. We've been very strong on ourselves to set aggressive timeframes, and I think that is something that we will continue to do. But I think if you look at our track record, we've done everything that we've said we were going to do. If you looked at what we were going to do in the last 12 months and the last 2 years. So it is aggressive, but we think it's achievable. And it's going to be an exciting 2019.
Excellent. We look forward to hearing from you in the coming months, and thank you so much for your time.
Hi Amanda, how are you?
Good.
Fantastic.
Yourself?
So we hear you met recently with New Century Resources, formerly New Century Zinc from Australia. So tell us a little bit about your thoughts on your discussions with them and what you think of the company.
I like them. I like New Century a lot. I invested in their first round a couple of years ago, and they've consistently executed for us. I have a sort of 4-tier system for judging companies, and New Century ticks all my boxes.
Well, tell us about those 4 tiers.
Well, the first is management and their ability to execute. I like management with a good track record that has all of the skills required to execute. New Century, they have their team has all got tons of experience, and for the last 2 years, they've had a very aggressive execution schedule, and for every target that they've made, they have hit on time and under budget, which is a rare thing in the mining world. So I have a lot of hope for them going forward. The next is financing. Companies that are beholden to the market for financing always run a risk and always trade at less money. New Century raised their money early, and has gotten into cash flow early and on time, which means their next stage of development to increase their cash flow is completely funded. So they don't have to come back to the market. So that's really important to me in terms of their ability to to perform in the market. The next thing I need is a good asset. And I prefer, at a minimum, the bottom half of the cost curve. Ideally the bottom quartile, and New Century is solidly in the bottom quartile of the cost curve, which means no matter where the zinc price goes, they're going to make money. And they're going to be the last ones to turn the lights off. So, and they've got a good 6 years in their present mine plan. I think that this year that will easily expand to 10 years. And if they have any exploration success, that will expand to 15 or so years, which is a great sort of long time of cash flow ahead of them. I think they're supposed to make 1.8 billion over their present mine plan in terms of revenues, and that's enough to keep me happy. So it's an economic asset and in the bottom quartile of the cost curve, so I'm very happy about that. And last but not least is news flow. A company needs to have news flow if they expect to perform in the public space, and they've got lots of news flow coming up. They're hitting positive cash flow for the first time in this quarter. They're ramping up from, I believe, 8 million tons of production up to 15 million tons to full nameplate capacity, and they'll be hitting milestones on that all through the year.
So what do you mean by, when you say nameplate capacity, what does that mean?
So they've got a mill that processes their tailings, and ideally you want to be running the maximum. You want to run the maximum amount of material through that mill to maximize your potential revenues and profits. And right now they're running at about 8, and they can get it all the way. They could run up to 15 million tons a year, and that's what they intend to get to by the end of the year. And then in addition to that, they are expanding their resource, and that's just, longer life. So all of that just means more cash, fundamentally. News flow that leads to more cash in the hands of shareholders.
Okay, so you're quite attracted, obviously, by the cash component. What does that mean for shareholders in terms of share appreciation? Why should people invest or think about investing?
Well, it means that they have all of the sort of 3 or 4 major milestones they have to hit this year. All mean that they will have more cash in the bank, and ultimately their NPV or their valuation will go up, and the more often they hit those milestones on time and on budget, the better rating the market will give them. So being worth more and being as a sort of valuation and trading at a better multiple by executing on those milestones should all lead to share price re-rating.
Interesting. Okay, we'll definitely want to watch.
Great.
Thanks for the update.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.